10-year note yields open higher, getting as high as 340 and above today. That's the highest level we've seen since April of 2011. Clearly, the market is seeing some momentum as going back to the end of May, we saw 10-year note yields trading at around 270. So about a 70 basis point shift higher in yields over the last, call it 3 weeks. And ultimately now ahead of the Fed, we're starting to see yields at their highest in 11 years. Another interesting note is that we saw an inversion in some of those curve spreads that we've been talking about. Really haven't seen the inversion since going back to April, but 2s 10s today dipped negative briefly before ending the day positive. But clearly that 2s and 10-year note yield trading right on top of each other, one of them has to give here ultimately moving forward. And again, all eyes will be focused on the Fed for that. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com, and you'll notice that volatility has made some big moves higher, not just today, but ending last week higher, moving into this week extremely higher. A lot of uncertainty out there in the market right now, certainly seeing a lot of uncertainty about how the Fed's going to handle their rate hike this week. Market had it priced in 50 basis points for the longest time. Now it's starting to lean towards a 75 basis point rate hike this week. So it's a very quick turn. Not something we're used to seeing in the markets, but clearly volatility is higher as yields are going higher and ahead of the Fed. Lastly, let's talk about what we do have this week. Well, we do have PPI, but that's going to get overlooked because all eyes are going to be focused on what the Fed says and what the Fed does. Now, the Fed is expected to raise rates. Right now, it's 50 basis points are cooked into the books. You've got about a coin toss whether they're going to go 75 basis points, and then how are they going to leave it for next month when they meet in July when another 50 to 75 basis points are already priced in. So a lot going on there. Likewise, they're going to add and talk about their quantitative tightening, which is the shrinking of their balance sheet. How will they handle that? Will they slow it down? Will they speed it up? Some answers that need to come. And likewise, the last thing, what about the economy? We're seeing, getting a sense that the GDP now numbers, which give an estimate of GDP for second quarter, are hovering still sub 1%. So it's interesting to see how the Fed talks about raising rates in a contracting economy or near contracting economy. All those answers on Wednesday. So keep your eyes on the Fed and what they do and what they say. So opening up the week, 10-year note yields hitting 340, the highest in 11 years, going all the way back to April of 2011.